Stephen.
The retail sector has been shrinking for over a year now. We had expected a little bit of relief with February's numbers. We didn't get it. Are you surprised?
I'm very surprised. I actually expected a small positive around 0.3. The market consensus was 0.6. Clearly, consumers are still under a lot of pressure. But I did think with all the stimulus coming through, the 550 basis points that we've seen, some recovery in disposable income as we've seen published by the bank last quarter, I thought they would be coming back to spending. But I do guess that they are a bit wary about spending, particularly if it's financed by credit.
Where do you think that money is being going? Because if they aren't spending it, latest household debt figures as a percentage of disposable income still very close to 80%. So they haven't been paying off much debt either, have they?
No, but I think the ratio of debt to GDP is mostly to do with the way they calculate the numbers. I think disposable income is not growing as fast as the debt is reducing. So there's some technicality there. They are paying off their debts. More importantly, they're not taking up new debt at the rates that we've seen in the years where consumer credit was at a boom. So that is a consolation. I do expect that those numbers to moderate significantly towards the end of this year. We should see them coming down to convincingly low levels, around 70% or so.
Would 70% be a comfortable level, you think, for South African households?
It's not really comfortable. It's still quite high.
I mean, it's a lot lower than Australia and the United States and the UK.
It's still quite high, but what we do like to see is disposable income increasing, and that is not going to increase convincingly if we don't see the job situation improving. Earlier on, your guest pointed out to the fact that jobs that are being created are unfortunately contract jobs, they're temporary jobs. We've seen numbers from State South Africa indicating that about 18,000 were created. What is 18,000 compared to almost 1 million lost last year? And who knows how much of those 18,000 are permanent jobs. So if we don't see the job situation improving, disposable income improving because incomes are improving, I don't think we're going to see a lot of consumer spending. However, consumers do think going forward, prospects for the economy are going to improve, which is why I think the second half of the year is going to be much better than this, coupled with the World Cup. So we should see some positive numbers, solidly positive numbers in the second half of the year.
Would you expect in those few months approaching the World Cup, and of course it's less than 2 months away, would you expect retail sales to start picking up in those months as people rush out and buy football jerseys and all sorts of paraphernalia for the World Cup?
I'm still expecting a positives, really. If we see the numbers that are coming up for next month, we should see some positives still filtering through into the numbers. They've been given a stimulus, not with the latest interest rate cuts, but I mean, they should be spending a bit more than they have.
Yeah, and of course this retail sales number is for February, and of course the latest interest rate cut came in March, and there was a feeling that that was really more of a sentiment type thing, that it could help to boost sentiment. Just one more interest rate cut.
Just one more interest rate cut, hopefully. We don't know, we'll see when the bank meets again. But it really did boost sentiment that there is money in the pocket. But unfortunately, or fortunately for consumer debt, people are using that money rather to pay off their debts rather than going out and spending that on consumer goods.
Do you think, given this data, that the Reserve Bank could be convinced to cut rates again? Because of course we do know, following the last meeting, which was the first one since the budget, there has been that slight shift in mandates. The Reserve Bank is taking a slightly different approach to monetary policy. Do you think it's going to be a little looser in its monetary policy going forward from here? Well,
last month I did believe that they shouldn't have cut interest rates. They should keep them low for longer. I still believe that. But the sentence that they had in the statement when they said that they were providing some additional monetary policy stimulus to reinforce the sustainability of the upswing makes me think that we cannot rule out a cut completely. I still believe that we have reached the end of the cut. They should just keep interest rates longer, but they can use that to give an additional boost to the economy.
Because of course we just aren't seeing that demand coming through in the economy at the moment, particularly from consumers and from businesses as well. Because the concerning thing is that fixed capital formation by businesses is not coming through, and if the cost of credit is made lower, hopefully they can come back into the market. Of course, and I saw a worrying story just a short while ago coming up on the newswires. Pravin Gordhan speaking in Parliament and saying that if the economy does not recover enough to boost tax revenue, they might have to look at increasing taxes going forward. But of course that would just be a double whammy for the consumer, because you're being given on the one hand with interest rate cuts, being taken back on the other hand with tax increases. Is that likely, do you think? Well, I think the economy is going to recover definitely, but the magnitude of the upswing is what is in question.
Manufacturing data is very volatile, but last month we saw a dip. We're expecting it to come up higher than it did. Obviously, we still need a lot of boost from the demand side to support manufacturing output. That hasn't come through except via car sales, which did quite well, which boosted that part of manufacturing. But you need to have consumer demand, which is about 60% of the economy, thereabouts, to come into the picture so that production also increases at a sustainable level.
Well, just given today's data, which was disappointing, do you want to put your neck on the block and say when you would expect retail sales to turn positive? Which month?
You know, I really expected that this month would turn positive. I still expect next month should pick up a small positive as well.